Hi, this is Zach here with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 6th of April. Starting off with Avacta, where still looks as though there's recovery in the air. We've got what is effectively an inverted head and shoulders formation with a left shoulder there, and this could be the right-hand shoulder. Key reversal to the upside today so far, so breaking yesterday's low and then currently above yesterday's high, which is nice. And the bounce off the 50-day moving average at 61 pence. Above that, hopefully we'll at least retest the upper 70s, and then ideally we're back up to the £1 area and the 200-day moving average area up at 105 by the end of next month. Feels like a punchy call, but while we're above 60p, there's a chance of that happening. On to stock which I haven't looked at for a little bit, Agronomics. Here you can see that also a bit inverted head and shouldery with a left-hand shoulder there, a head obviously, and then the right-hand shoulder here. Neckline around, 21.5 pence. End of day close above that, and we can see the shares, I suppose, ideally heading back towards the upper 20s, which would be a decent result. The idea backed up by the gap close that we had from last week, and also the way the 50-day moving average is now curling upwards. Near the lows or from the lows, and we actually obviously had for the first part of March a bear trap below the previous support area around 17-18 pence. So quite a few positives there. Just need to break 21.5 pence on an end of day close basis. On to Canadian overseas, where it seems that the bears are doing their best to punch the company, but at least from a technical point of view, it looks like the worst is over, or it would be over, while we remain above the floor of that gap from back in January. That was around 20.5 pence. The low yesterday around 21 pence. So in fact, it's a failed gap fill, which is even better than one where you bounce off the bottom of the gap. So technically looking actually quite interesting, and also we've come off oversold, but probably if you are undecided and still scared off by the bears at the moment, want to see the shares break the resistance from earlier at the end of last week at 25 pence. So end of day close above 25 could get the stock back up towards the low 30s, which is where they were just at the end of last month. But everything hinging here on holding 21 pence over the near term. If we can do that, it means that the bears may be wrong. On to Cobra, which doesn't have such controversy or considerations. Here we've got nice V-shaped bull flag, as I call it. We had a bear trap gap reversal off the low, unfilled gap to the upside off the low, which is very nice. And a golden cross for the early part of March, i.e. 50 and 200-day moving averages rising. All of that means that we're looking for a retest of February resistance around the 3.2 pence area, and that's also the top of that triangle from back in this time last year. Above 3.2 pence, though, we can look for greater glory, and that would consist of a move up towards as high as 5.5 pence over the following 2 months, so maybe as soon as the end of May on that 5.5 pence target. Upside valid at least while we hold above recent support and the 50-day moving average at 2.1. So above 2.1, looking for 3.2 and 5.5 pence on Cobra, which is nice. Just interviewed Empire Metals earlier today, and here we've had one of our favorite signals, which is basically a gap off the lows, unfilled gap to the upside off the lows. We've got also support coming in above the 50-day moving average, and that's currently around 1.1 pence. But above the 50-day line, looking for as high as that December resistance line projection at 2.1 pence, perhaps over the next 1 to 2 months, maybe by the end of next month as well. The turnaround was signalled by that bullish divergence line there, which was tested at the early part of February. And it looks as though hopefully this time Triple E will break higher. If you're cautious, maybe wait for an end of day close through the 200-day moving average at 1.57 pence. But the two gaps now that we've had in the near term look as though they are signalling a turnaround. Hardly ever looked at FireAngel, despite its poetic sounding name, but the reason for inclusion today is that we've broken a 1-year resistance line. That was around 16 pence. We've also broken the 200-day moving average, and we also gapped up as well. In fact, that's the third gap in the recent past. Bear trap, sort of a double bear trap gap reversal, triple bear trap, triple gap reversal above the 16 pence level, looking for as high as 28 pence, which is 1 year resistance on the shares. And the upside valid at least while we hold above the old support area and the 50-day line at 13 pence. Above 13, looking for 28 to 30 pence on FireAngel. On to Hemogenics, which I know has its fans, and stock sort of tried to rehabilitate itself since the last interview that the company did with me, which was very nice. Here we've broken again the 50-day moving average. Good support for the shares between 1.3 and 1.4 pence, which is a plus. RSI now bouncing around the 50 level. We also had a sort of slingshot RSI rebound, which signaled the low in the stock. What's good here is that we're basically finding a support, new support again, what was pre-December support for the shares around 1.4 pence, which renders that early March move a bear trap, and above 1.4 looking for as high as 2.4 pence, which is the top of that broadening triangle, maybe by the end of next month, something like that, or at least a 2-month time frame. If you're cautious of the shares, obviously you'd wait for a break of the main resistance here around 1.7, 1.8 pence and the 200-day moving average. But looks as though with this move today, things are looking rather more healthy for Hemo. Requested stock, which is requested on the basis that the shares have hit one of my earlier targets at 7 pence, above 7 pence. Which was that August resistance line target, looking for 9.5 pence at the top of a rising trend channel from back in January. Maybe see that by the end of next month, or if we're really lucky by the end of this month. And a very nice RSI uptrend line there with multiple bounces, which suggests that this is a strong enough trend, or a decent recovery trend for the shares. This stage only well below 6 pence, really delaying the upside scenario, and 9.5 pence. Worth looking at Orphan again, because it seems to be trying to change its recent trend. New CEO and a break through the 50-day moving average. That's around the 15 pence level. Weekly close above that. And it means that we could be looking at a move towards at least January, February, or late January, early February resistance in the 200-day moving average at 20 pence. Which would be a reasonable result, looking a bit inverted head and shoulders like as well at the moment. So that is an added plus for this situation. I was trying to draw a resistance line here, if I can, and which will illustrate the point. Here we've got a line of resistance from back in January, and just breaking that now along with the 50-day moving average. So that's the reason for the inclusion today. On to Osirium, which has been one of the stars of the show. I think it was up 100% yesterday, which is very nice. I think I had a target of 14 to 15 pence previously, which has obviously been blown out of the water. There's another bit of resistance here with this December resistance line. I nearly tweeted this out yesterday. And the 200-day moving average. So breaking 18 pence, though, on an end-of-day close would give the shares the chance of heading up to 28 pence, which is that April 2021 resistance line projection, and we could see that by the end of next month, or the way things are going by the end of this month. But let's see if we can get a decent end of day close through 18 pence just to really turn the trend around at Osirium. Very impressive stuff there. Also looking quite impressive at the moment is Plant Healthcare, which has had a beautiful breakout here. I suppose the highlights are the gaps to the upside. I think there was one there at the end of last month, and then one to start this month. Beautiful key reversal to the upside and a gap fill rebound as well today. So you've got it all going on at the moment. And that suggests that we could be looking for a significant upside here. It looks like there's been a sort of fundamental change here as well as the technical change. Top of that trend channel from back in January 2021, January last year, up to 24 pence. So this could be a sort of an Osirium Mark II. Which would be very pleasant indeed. We've also got the 50-day moving average rising, which makes those gaps to the upside look all the more inspiring at the moment. This stage only really back below the intraday low of today so far, around 11.25 pence, really delaying the 28 pence notional technical target for PHC. On to Valereum on the Aquis Exchange. Here we've got, so it's one of the few decent movers on the Aquis Exchange. Here we've had, about 6 or 7 rebounds for the shares in the low 30s, which is a plus after consolidating the move that we had back at this time last year. So new support coming in above old resistance. Just want to see the shares really sustain the 200-day moving average area in 40 pence. I think that would hopefully do the trick this time, and we won't get selling in the 50s area. But just this looks like a decent bear trap situation from below the initial March support at 34 pence. The longer we stay above 34, we're looking at the low 50s and then up towards that July resistance line projection as high as 75 pence over the next 1 to 2 months, or at least 1 to 2 months after we get that break of 40 pence. Finishing off with another stock which has been in a sideways consolidation for quite some time, Xtract Resources. Still looking for the shares to break the all-important trend line from last year, which is basically around the 7 pence level. If we can break 7 pence, then we are looking at the top of that rising trend channel from March as high as 11 pence over the following month or so. Plus point here, or the plus points here, are the way that the 50 and 200-day moving averages are both rising well, and it would be, it's almost actually easier just to say buy any dips towards the 50-day line on a technical basis rather than waiting for 7 pence to break. That's it from me today. More updates tomorrow.